What's going on, everybody, and welcome back to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So make sure you please subscribe, please listen to this episode from start to finish. I promise you, you will not regret it. Please note that anything discussed in this episode is not financial advice, so please do your own research before investing into any stock. In this episode, we're going to talk about probably my favorite stock on the stock market at this particular point, and that is Tesla, ticker symbol TSLA. Tesla recently had their earnings report and they didn't do too hot, and the stock price suffered as a result, and Wall Street didn't like it that much. But I want to take this particular episode as an opportunity to go through the quarter, put things into perspective, and let's ask ourselves this question: should we still be investing in this stock over the long term? And if you hold positions right now, should you be adding to your position? Let's get into it. Okay, y'all, so there's three things that I think that we should focus on in this particular quarterly update. That's going to be the highlights, that's going to be the financial summary, and that's going to be the outlook. What is the forward guidance for the company moving forward? So let's just start off with the highlights. So profitability, 11.4% operating margin in Q1, 2.7 billion in GAAP operating income, 2.5 billion in GAAP net income, and 2.9 billion in non-GAAP net income, all for Q1. So in summary, in the current macroeconomic environment, we see this year as a unique opportunity for Tesla. As many car makers are working through challenges with the unit economics of their EV programs, we aim to leverage our position as a cost leader. We are focused on rapidly growing production, investments in autonomy and vehicle software, and remaining on track with our growth investments. Now, there is no secret that Tesla had a reduction in operating margin year over year, net income, operating income, free cash flow, and all of that. So the stock has dropped as a result of that. But there's one thing that I'm going to focus on, and I want us to think about if we're going to actually invest into Tesla. Our near-term pricing strategy considers a long-term view on a per vehicle profitability given the lifetime value of a Tesla vehicle through autonomy, supercharging, connectivity, and service. We expect that our product pricing will continue to evolve upwards or downwards depending on a number of factors. So it's very, very important to understand that Tesla is looking at the profitability and the pricing of its vehicles over a long-term trajectory. Tesla is trying to create an ecosystem, and I believe they're going to be successful in creating an ecosystem around the Tesla cars, and they're going to be able to get profitability not just from the hardware in terms of the car itself, but also the software capabilities from the autonomy, connectivity, service, and all of the other things that the company is working on progressing as the years move on. So we have to look at the pricing strategy, the price cuts, and the lack of operating margin that we are used to as a short-term headwind, not a long-term headwind. Now, cash, operating cash flow of 2.5 billion, free cash flow of 400 million, and $200 million in increase on our cash and cash investments in Q1. Now, although we implemented price reductions on many vehicle models across regions in the first quarter, our operating margins reduced at a manageable rate. We expect ongoing cost reduction of our vehicles, including improved production efficiency at our newest factories and lower logistics costs, and remain focused on operating leverage as we scale. So what's also important is that the company said that they are rapidly growing energy production capacity at our mega factory in Lathrop, and we recently announced a new mega factory in Shanghai. We are also continuing to execute on our product roadmap, including Cybertruck, our next generation vehicle platform, autonomy, and other AI-enabled products. So the company is still positioned very, very well for growth. Now, our balance sheet and net income enable us to continue to make these capital expenditures in line with our future growth. In this environment, we believe it makes sense to push forward to ensure we lay a proper foundation for the best possible future. So, the company's cash position is very, very strong, and Wall Street continues to discount that fact. Tesla may be lacking in terms of an operating margin standpoint in this particular quarter, free cash flow in this particular quarter, operating income, net income in this particular quarter, but the company is not hurting for any money, and the company still has sufficient liquidity in order to be able to invest into what the company needs to do to make things grow. Operations, 3 last things: Cybertruck factory tooling on track, producing alpha versions. The Model Y was the best-selling vehicle in Europe in Q1, and the Model Y was the best-selling vehicle in the United States in Q1, excluding pickups. Now, let's take a look at the financial summary. We see a lot of negative numbers on here. Negative 17% for gross profit, negative 977 basis points for total GAAP gross margin, negative 26% from income from operations, negative 15% for EBITDA, negative 23% from EPS attributable to common stockholders, negative 37% in net cash, negative 80% in free cash flow. So the company is hurting from a profitability standpoint year over year. So when I look at these particular numbers, I'm not upset that the stock price dropped, because I understand how stocks move and I understand what stocks trade on. Every single particular stock trades on a specific metric. For example, let's say Apple. Apple has great services revenue. Let's say they have great iPad revenue. They do great from a Mac standpoint. But if that iPhone revenue is not doing well, the stock price is going to drop because the company trades on iPhones. They understand that the entirety of the ecosystem is based around the iPhone. Same thing here. Tesla has an ecosystem, and they're building a very, very good one. But the success of the ecosystem is centered around the car. And so the gross profit and the operating expenses and the income is decreased because of the car. And so, yes, we may see 148% year over year in energy generation and storage revenue and 44% in services and other revenue. That's outstanding. That's probably the best quarter. I've not looked in the past, but that's probably the best quarter this company has ever had in terms of energy generation and storage revenue based on Q1. But the company cares more about the automotive revenues, right? Wall Street cares about the automotive revenues. Wall Street cares about the automotive gross margins versus the entirety of the gross margin for the entire business. And so, yes, we may see some negatives here, but energy generation and storage revenue, big positive. Services and other revenue, big positive. The fact that total revenues is up 24% year over year, that's a positive to me. Cash and cash equivalents and investments up 24% year over year, $22.4 billion in cash. Wall Street is going to have to put some respect on Tesla's name from a balance sheet perspective, because people do not talk about that. Okay, y'all, so let's look at the outlook. What is the outlook? What is the guidance that the company is telling us? From a volume perspective, we are planning to grow production as quickly as possible in alignment with the 50% CAGR, which stands for compounded annual growth rate target that we began guiding to in early 2021. In some years, we may grow faster, and some we may grow slower, depending on a number of factors. For 2023, we expect to remain ahead of the long-term 50% compounded annual growth rate, with around 1.8 million cars for the year. Now, if the company is able to deliver on this, I truly believe the stock price will appreciate as a result on this. cash. We have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. The company knows what it's doing from a balance sheet perspective, so I am not worried about that in the slightest. Profit. While we continue to execute on innovations to reduce the cost of manufacturing and operations over time, check this out. We expect that our hardware related profits to be accompanied with an acceleration of software related profits. We continue to believe that our operating margin will remain among the highest in the industry. Do not discount the ecosystem that Tesla is creating around the hardware. The software is going to be very, very material to the success of this business. Autonomy, AI, insurance, all of these things, pay attention to it. Product. The Cybertruck remains on track to begin production later this year at Gigafactory, Texas. In addition, we continue to make progress on our next generation platform. Tesla is still working, y'all. They're still working. They're still doing their thing. We may see a headwind right now, but let's see where the company's going to be a year from now. Let's see where the company's going to be 2 years from now. I bet you they're going to be a whole lot further along in a couple of years than where they are right now. Okay, y'all. So before we get out of here, let's just take a quick look at what Tesla has been doing technically since the beginning of January. Now, the stock opened up around $118.47 this year, and the stock topped out at around $217.65 in February. So if we look at that, the stock increased about 82% from where the stock opened up to where it stalled out at this particular year. Now, if we take a look at the year-to-date high and bring it down to where the stock closed at the time of this video, the stock closed around 26% down from where it was at the year-to-date high this particular year. And so the stock is on a particular discount. And so, many people may be looking at the stock and they may say, hey, we're trying to wait until the stock comes down to these lows right here. And so the stock could potentially come down to these particular lows, but I wouldn't be holding my breath on that. And this is why. When the stock was down here around $100, around $102, this was the cheapest that the company has ever been in the history of the company from a valuation standpoint. So to expect the stock to come down here, I believe wouldn't be smart. I don't believe it would be smart, and I believe that it would be a mistake to expect the stock to come down here. If the stock comes down here, by all means, I would gladly rack up some more shares at $100 of Tesla. But I'm thinking more of looking at Tesla from other levels of interest. So a level of interest, I believe, right here at 160.67. I believe that's a pretty good level of interest, and I wouldn't be mad at somebody adding to a position or buying some shares right here. We see another level of interest with a pretty key level right here at 154.38. I wouldn't be mad at you potentially buying some shares right here. We have a gap between 154.38 and 146.71, where I believe will be another level of interest that I would like for you to potentially buy some shares at. So we've got some specific levels and some potential levels that you can add to a position, start a position, and just continue to build that position. Because y'all, I'm all about building that position, and the goal is to get to 100 shares in this particular company, really by any means necessary at this point. That's really what I'm thinking about right now. And so, like I said, I'm not in Tesla for what it can do for me in a month. I'm not in Tesla for what it can do for me in 1 year. I'm thinking about what can Tesla do for me in a decade. That's what we're talking about, y'all. What can the company do for me what can holding these particular shares and building my position do for me in a year or in 10 years? What can it do for me in 10 years, right? A decade. That's what I'm talking about when I look at this particular stock. When I look at everything that the company has going on, if I build a position successfully while the stock is in this particular area, what is it going to do when it gets back up to 300? What is it going to do when it gets back up to 415, 420? And when it exceeds that particular level, because I believe that it can definitely exceed this particular level and continue to go up, what kind of value am I going to be able to extract from that company when it goes back on that extraordinary run and exponential run that I believe that the stock is eventually going to go back on? So in summary, y'all, Tesla is a stock that I believe you should be holding over the long term. It's a company that I believe that you should be adding to your portfolio. A company you should be adding shares to your position if you already had it, if you believe in the company, if you believe in the growth of electric vehicles, if you believe in the ecosystem that Tesla is creating around the car, if you believe in AI, if you believe in autonomy, autonomous driving, so many things related to robotics and supercomputers and everything related to artificial intelligence that Tesla is doing. If you believe in all those things and you have a long-term time horizon around the particular company, I believe this is a great time to add to your position because the company is going to become more valuable. The CEO knows what he's doing. The staff around Elon Musk knows what they are doing. And the value of the company, in my opinion, is only going to continue to grow. So I'm telling you, right now is the time for you to be adding to your position, building your position, and figuring out how you are going to become an investor into Tesla. As always, I thank y'all for tapping in to another episode of the Trade for Yourself podcast. Please like, please subscribe. Make sure you hit that notification bell so you can be in the know every single time I drop an episode. Please reach out to me in the comments. Let me know. Do you believe in Tesla? Do you think Tesla's days are done? Do you believe that what we had in the last quarter was overblown? Do you believe that the stock needs to come down even further for you to justify buying it? Let me know in the comments what you think about this company. As always, remember, don't pay for it. Trade for it. I'm going to catch up with y'all in the next episode.